A Tampa homeowner just received his 2026 insurance renewal. The number at the bottom was $14,523 for 1 year. He owns the house outright, no mortgage. He has lived there for 40 years without a single claim. This week, he canceled his policy entirely. Slate Counts is now one of up to 20% of Florida homeowners going bare, gambling their largest asset on the belief that insurance has become impossible to afford. The question is not whether people knew Florida had no income tax. The question is, did anyone calculate the real bill? For decades, Florida marketed itself as America's tax haven. No state income tax, endless sunshine. Between 2020 and 2023, more than 1 million people took the bait. Real estate prices soared. But by 2024, something changed. Florida's net migration fell 49% in a single year. Almost 511,000 people moved out in 2023, the most ever recorded. A quarter of them were between 20 and 29. What happened? The hidden costs caught up. Florida homeowners insurance has increased 72% over 5 years. The state now has the most expensive homeowners insurance in America, averaging $5,700 annually, more than 3 times the national average. Add flood insurance, add property taxes, add homeowners association fees. Suddenly, the no income tax paradise looks a lot more expensive. The math was supposed to be simple. Leave a high tax state, keep more of your paycheck, live cheaper. But insurance is the variable nobody saw coming. Florida homeowners pay an average of $5,700 per year for property insurance. The national average, $2,424. In coastal areas, the gap widens dramatically. Cape Coral has the 3rd highest premium to market ratio in the nation. In Monroe County, the average premium hits $7,162 per year. These aren't luxury waterfront estates. These are middle-class homes in working-class neighborhoods. Individual stories paint an even starker picture. Tampa resident Slate Counts saw his premium jump from $8,000 to $10,000 to $14,523 in just a few years. He made the decision that 15 to 20% of Florida homeowners are now making. He dropped coverage entirely. No catastrophic protection, no liability coverage, nothing. Just him, his 1913 bungalow in Tampa Heights, in the hope that the next hurricane misses. The insurance crisis has him considering leaving Florida entirely. A lot of people are being priced out of paradise, Counts told reporters. Mark Friedlander of the Insurance Information Institute warns that homeowners who decide to self-insure in recent years regret it to the point where they cannot rebuild their homes and have to move. It is a bad road to go down, he says. In most cases, if homeowners make that choice, they're going to regret it for the rest of their lives. But insurance is just the beginning. Many Florida homeowners also need flood insurance, another $700 to $900 per year, and it is often mandatory. Then come property taxes. New buyers get reassessed at purchase price. The low tax bill the previous owner had does not transfer. Florida also has one of the highest concentrations of HOA communities in America. About 67% of homeowners pay monthly dues, compared to 25% nationwide. Some communities add CDD fees of $200 to $300 per month on top of that. Add it all up. A $500,000 home in a typical Florida community could cost $5,700 in homeowners insurance, $800 in flood insurance, $6,000 in property taxes, and $2,760 in HOA fees. That is $15,260 per year before the mortgage, utilities, or maintenance. Now compare that to California. Yes, California has state income tax, but for someone earning $100,000, the total state income tax, insurance, and property taxes come to roughly $13,300. That's actually less than Florida's insurance, flood coverage, and property taxes alone, before counting HOA fees. For middle-class families earning $75,000 to $125,000, the advertised Florida advantage increasingly disappears. And this assumes stable insurance costs. An InsureFi report predicted Florida homeowners insurance would rise to $15,460 annually by the end of 2025. The structural problems run deep. Between 2022 and mid-2023, more than 30 insurance companies either left Florida or went insolvent. Florida accounted for 73% of all homeowners' insurance lawsuits nationwide, despite having just 11% of the claims. The state has responded with reforms, eliminating one-way attorney fees and restricting assignment of benefits practices. There has been progress. Citizens Property Insurance's policy count dropped to 395,000 by January 2025, a 50% reduction. 17 new insurers entered the market. In January 2026, Governor DeSantis announced Citizens would reduce rates by an average of 8.7%. State Farm requested a 10% reduction. Several other private insurers filed for decreases as well. But even with projected decreases, Florida's insurance will remain the most expensive in the nation, and the damage to Florida's affordability brand has already been done. Real estate agent Kara Amir points out that while Florida does not have state income tax, the savings are often overwhelmed by rising costs of homeownership, coupled with higher homeowners association and condo fees. The housing market is reflecting the stress. 5 Florida markets, Cape Coral, Fort Lauderdale, Lakeland, Palm Bay, and West Palm Beach, have been flagged by Cotality as having very high risk of price decline. Cape Coral home prices fell nearly 7% year over year and are down over 13% from their pandemic peak. Northport saw prices drop 20% over 3 years. Lee County values fell more than 10% year over year and are down 16% from levels before Hurricane Ian. The human impact is visible in Fort Myers Beach, still rebuilding after Hurricane Ian. Melissa Caballero, an office administrator at a local church, is thinking of leaving Florida in search of more affordable housing. Sometimes it makes her cry, she says, because it will not be the same as being here. Rising insurance costs seem to be driving the decline in home values, according to Shelton Weeks at Florida Gulf Coast University. When insurance becomes unaffordable, buyers cannot get mortgages. When buyers cannot get mortgages, demand collapses. When demand collapses, prices fall. Not everyone agrees the situation is dire. Governor DeSantis and state officials argue the reforms are working. Litigation rates dropped 25% in the first half of 2025. Reinsurance costs have stabilized. Economist Nadia Evangelou of the National Association of Realtors says she does not see home prices declining in Florida because demand remains very strong. Florida still leads the nation in net migration gains. And for wealthy buyers, Florida's lack of income tax still represents massive savings. A high earner making $500,000 would pay about $45,000 in California state income tax. At that level, Florida wins overwhelmingly. But critics argue the new providers being cited as proof of market recovery are often small, undercapitalized, or linked to previously troubled companies. The Insurance Fairness Project warned that shifting the burden away from citizens serves as temporary relief, but has not addressed the state's deeper vulnerabilities. What does this mean for the average American considering a move to Florida? You need to do the full math, not just the income tax savings. For retirees on fixed incomes, the crisis is particularly brutal. If buyers cannot get mortgages because insurance is unaffordable, resale values collapse, threatening retirement plans built around home equity. For young workers, the economics are even worse. Florida's outbound migration in 2023 was led by people aged 20 to 29, exactly the demographic a growth economy needs. High housing costs combined with rising insurance are pushing them to states like North Carolina, Tennessee, and Georgia. As economist Leslie Deutsch told Newsweek, Florida is a growth state and its whole economy depends on population growth and job growth. If that reverses, it would really hurt a lot of the service industries in Florida. The broader question is whether other states will follow Florida into this insurance spiral. California is already seeing similar dynamics with wildfire risk. Louisiana faces hurricane exposure. As climate change accelerates, more states may find themselves where Florida is now, where catastrophic weather risk makes private insurance untenable and forces homeowners to either go bare or rely on underfunded state backstops. For now, Florida remains attractive to wealthy individuals and retirees who can absorb the insurance costs. But for middle-class families, the calculus has shifted. the hidden tax is no longer hidden. And for many, the dream of affordable Florida living has become financially unsustainable. Paradise has a price, and in Florida, that price is compounding faster than most newcomers expected. The no income tax sales pitch worked for years, but the bills are coming due. Whether Florida can stabilize its insurance market and preserve its affordability advantage, or whether this marks the beginning of a long-term exodus, will define the state's next decade. Capital Flight will be tracking what happens next.